Welcome to the Trading Focus once again. Hope everyone is doing good. The prediction of the next movement of the market needs the indication to signal if you are going to buy or sell in the market. And one of the key makes that happens is to know how to use the chart patterns. That's why in today's video, we are going to explain and show you where to enter in the market, where to set a stop loss by using an ascending triangle in the market. Without being late, we are coming back in the minutes on our today's video. Remember to subscribe on the channel, like the video, leave the comment below, and we are coming back on today's video. Okay, welcome back again. So now, what is an ascending triangle? Okay, so from our previous videos, we talked about bilateral triangles. So this is one of the family from bilateral triangle chart patterns. Okay, so those chart patterns are the one that when you see the formation of that triangle, you have to wait until you break out from the upside or the downside. That's where you are going to be catching a trade from taking a buy or a sell. So an ascending triangle is the type of triangle chart pattern that occurs when there is a resistance level and a slope of higher lows. Okay, this is a higher lows from the downside. So from this support, this is higher lows. As long as we are pushing up, we end up rejecting from the resistance. So multiple times as we are creating an equal high where this market is failing to break and continue in the upside direction, which we end up by creating an equal highs areas of resistance. So from the downside, we are trying to make a higher low, higher low, higher low, but this form of higher low showing us that the market is trying to move up. In that scenario, we end up forming an ascending triangle. Now, how can we trade this chart pattern? How can we take an opportunities to buy or sell on this chart pattern? First and first, you have to know that this chart pattern doesn't look just on reversal or a continuation. So you can wait from any area where you break. Okay, now from this candlestick formation of an ascending triangle, you can see that this resistance, the candlesticks are rejecting from resistance. From the upside to the down, higher lows, these are higher lows. So higher lows, by showing us that we are trying to move up. So how do we trade this chart pattern? When you see this formation of chart pattern, you have to wait from the upside and even from the downside. If we break below from the downside, we are going to be taking a sell from the bottom. Okay, when we break above from the highs of the formation of an ascending triangle, we are going to be taking a buy from this area, anticipating the market to move in the upside. Now we are going to move on the chart and see how can we take those opportunities. Entering with this chart pattern, remember, you have to wait until we start break out from any position of the breakout. Waiting from buying or selling from the breakout from an ascending triangle. So you will set a buy stop or a sell stop from the areas where you are expecting to take a sell from if we break out, or setting a buy stop from an area where we are expecting to break. Okay, you will set a buy stop above resistance and a sell stop below the resistance. So when we break out from those areas, that's where we are going to be taking those opportunity to buy or sell from. So that is the first way to trade this chart pattern. Okay, secondly, this is what you are going to be doing when we break. Okay, when we break below from this area, we are going to be waiting from the areas where we can sell from as supply zone. Okay, so if you wait from there, you are waiting the breakout and a retracement from the supply zone or the supply area to sell from, by anticipating the market to change now the direction to the downside. Now, from the areas of the upside, we are going to be waiting also by breaking out and wait from the areas of demand, and then we can take our buy from those areas, anticipating the market to continue in the upside. Okay, those are two ways to trade this chart pattern. Okay, now even this is another way to trade this chart pattern. So at this time, we be looking for the candlestick formation. If you see a bearish candlestick break and close below the higher lows, this line, this trend line, you are going to be taking a sell from the second candlestick. Okay, if we get a candlestick breaking below this trend line, we are going to be entering by taking a sell, anticipating the market to continue in the downside. So even from the upside, we are going to be waiting for the candlestick, a bullish candlestick, break and close above resistance so that we can take a buy from the open of the next candle, anticipating the market to continue in the upside. So that is how we enter or take opportunities from an ascending triangle. So now we are moving to the chart and take some examples to make sure that we are going to be mastering this chart pattern, take a buy or sell in the market. Okay, from the chart, we have now the formation of equal high from resistance from this area, and even these lows from the downside moving upside. We have a formation of an ascending triangle. So what are we going to be looking for here? We have to make sure that we are going to be taking a buy or a sell from the breakout on the top by taking a buy from the bottom. That is where we are going to be looking for sell. So now we are going to use a penning order, which is a buy stop and sell stop, because we don't know exactly the direction of the breakout. Okay, so now buy stop will be above from this area. Remember, the stop loss will be below the formation of an ascending triangle. Okay, now we have a buy and a sell stop. So how can we set now a take profit based on? So remember, these chart patterns, you don't know exactly the direction of the breakout. That's why we are going to be taking a small distance over profit, which will be equal to the formation of a triangle. So let's say we are going to be taking a TP from this area. This will be a TP from the sell side, and from the upside, the TP will be from this area. If we break from the downside, we are going exactly to be cancelling the buy stop. If we break from the buy stop, we are going to be cancelling the sell stop. Okay, so now let's take a look and see what happened. So we broke below this time, which means that we are in a sell position. We have to cancel a buy position. Okay, so now let's see if we can continue until we get to our target. Okay, we are moving down and then we go to our target, and that's where we rejected already from. So now that is how we trade an ascending triangle in the market. This is for a day trader or scalpers. Make sure that you are taking a sell quick and then you close. This is our first example. Let's take another example. So here we are in the uptrend again. So, and then with the formation of an ascending triangle, we have these highs from this area, and from the downside we are creating higher lows. So now we have to wait for the breakout from the top or from the bottom to take a buy or a sell. So now we are going to be setting also again the buy stop and sell stop. Okay, if we break out, we are going to be continuing the upside. If we break below, we are going to change the direction to the downside. TP from these areas. Okay, now let's see. We are breaking above, we are breaking from the top. So now we are expecting the market to continue in the upside. Let's see if we can get to our TP. We are still moving up. Let's see what happens. So now we go to our TP. So that is how we trade an ascending triangle in the market. So guys, using these chart patterns or any kind of chart pattern to give you a direction or a prediction for the next move of the market, you need to backtest the strategy. You need to backtest and make sure that before you move to the real account, you have to make sure that you tried it on the demo account and even on backtesting. So guys, thank you so much for your time. Until next time, take care and be safe. Remember to subscribe on the channel.